Have you ever drawn a support level only for price to come to it and slice through it without any concern, like it never existed? Well, maybe you're not drawing the right levels for support and resistance. And in this video, I want to show you a few tactics that I use to determine what makes a good level, and also a little bit more advanced tips and tricks for determining where price could get and react in an environment that usually it's not straightforward, like trading and specifically crypto. So first of all, I want to point out, even before going into the details, that it's very important to know your market. So in this case, we're looking at Bitcoin, but pretty much every crypto could trade differently, or at least slightly different to Bitcoin or Ethereum or Solana or any other asset class. And you need to know your market upside down. And it doesn't matter if it's crypto, or maybe you trade Forex, or you like the indices, the stocks. You know, every asset class pretty much has its own specifics. And I think it's very important to understand it and learn it. And the only way you do this is with hours and hours of practice and staring at charts and drawing lines and backtesting, going back in the past years or months, and going through the time frames, just pretty much just putting in the work. And I think it's very important as a beginner, or even a more advanced trader, to do this consistently. So every day, with all kinds of events that might happen to the market, and so on. And just keep in mind that the more sophisticated or the older the instrument that you're trading, the more likely you're going to have fake outs. And we're going to talk about fake outs and why they exactly occur. But for example, you can see this on the S&P here. Very commonly, we have those liquidity grabs here to the upside in this case, but also, same happens pretty much to the downside. You can see it somewhere around here. A lot of wicks and a lot of price action into this level, that if you're not experienced and you don't know what these mean, you might get stuck on the wrong side of a trade. But before that, why did I mark these levels out? And let me just go back to Bitcoin in this case, and look into what exactly makes like a good level. I have a structure of a few things that I look at. The first and very simple one is zoom out. Doesn't matter the time frame. This is the daily, but you can do it on the weekly, monthly, hourly, whatever. Zoom out and just an eye test of what you believe is a relatively good level, and where price has been respecting it. So in this case for Bitcoin, I can easily see that somewhere around here, there are a lot of reactions. Yes, some of them are closes, some of them are wicks, but pretty much there's a lot of price action in this area right here. And I can determine just by first test of the eye that this makes a good level to trade. Like now, if you go back and use this as an example, this other range, like what makes here a little bit more complicated is that there's no clear level, just like an eye test. And this is on the horizontal level. So this here might be it, but it really doesn't, because price, fluctuated quite a bit. Maybe here the top, but again, it's just not, that clear. There was a fake out here, but maybe this is a good level. But sometimes it's a lot more difficult to just use the eye test and determine. So what we need to do is use additional rules, obviously. And first of all, you can use big round numbers. This is also very commonplace for price to react. And in this case, it's around 90,000. So it's not exact, as you can see. That's why I always put like an area. It, of course, shouldn't be huge, but it shouldn't be like a line. In my opinion, lines are a little bit more difficult to trade around, because you would expect exactly this price something to happen, but it usually doesn't work like this. It's in an area, and in this case 1992 area seems like a place where price has been respecting it, and you can safely say that, okay, maybe this is an area that I could base trades on, or that Bitcoin will bounce from if we have another test. When it comes to bouncing, and if the level will be respected, another very important thing is the number of touches that you have. So usually a good support level starts with at least 2 touches, no matter the time frame. And you can see here on the all-time high of Bitcoin, in this case, we have one touch here, another touch, I would say, and then a few more touches on the daily here around 106. So this makes it quite a significant level. But the more the level gets tested, so ideally you want to have more than 2, so 3, 4 tests to determine a good level, ideally. However, the more it gets tested, so 5, 6, 7, whatever number of times, this level quite possibly and the probability of it breaking is much higher. So in this case, on the 60 here, in this case on the support level of 90k, you might say that we got 1, 2, 3, 4, 5 touches, so 5 clean touches and few reactions here in the area of this level. You might say that next time we get into the 90s, it's quite possible that we close below it or we dip below it quite significantly, because there has been so many touches. So it's very important to understand this. It's obviously it's never guaranteed that whenever price reaches a level, it will respond to it and it will just not slice through it. It depends on many criteria, but in general, it works quite well. And as a rule of thumb now, if Bitcoin comes back here at the 90s, I'll be a little bit more reluctant to buy purely at support here. I would look for maybe closes back within the range, or maybe going back somewhere lower where I could find potentially some support levels. So it's it's a bit of science, but with practice, you will be able to understand this a little bit better. And also what makes a level significant is, as I mentioned, those liquidity grabs, those wicks just below or above support or resistance. And what are these and why do they occur? So as I said, the more advanced the market, usually the more often these happen. But pretty much what happens is newbies or retail investors like me and you go into this chart, draw it, mark it up like this, and they say, okay, perfect, I have a level here. So let's say we don't have this price history here. So I have a level here, it's interacting clearly, and I want to be buying the level. So 92 seems like a great level. I'll put my orders here, I'll ape in potentially with leverage, and my stop is somewhere below this wick, because for example this wick was the lowest that we got, and now I have a trade up to the top of the range, for example, and it's 11 hour, whatever in this case. However, usually what happens is big market makers and in general big participants and professional participants, like even algorithms that trade these assets, they know that there's a bunch of liquidity in form of orders around this level. So what would usually happen is they will use these orders to fill their bigger positions, and then pretty much the trend will reverse in the other direction that the bigger players want it. And you technically want it, but if you are using leverage and you're using the wrong place to stop loss, then you probably get out of the position only to see it after that running in your direction. And this is very common on both sides. You can see it here also on the top for Bitcoin, but also just wanted to quickly show you the S&P, because great examples here on the all-time high on both sides actually. And you can see these liquidity grabs or just breakdowns and then close above the certain level. It's very common, and these are usually trading signals. These are the things that you want to see, and this just reaffirms that the level is very significant. Another thing to take into consideration is how old the actual level is, because sometimes, and Bitcoin is a great example for this, sometimes very old levels are respected. So in this case, you can see the all-time high of Bitcoin from previous years. This was like 2021, so like 4 or 5 years ago. This was a key level. We didn't test it for a long period of time, and then price chose this level to consolidate and hang around and so on. But usually, if it's a very old level with very many retests, I think it bears a lot less significance than the more recent levels. Again, if you have like a significant number, so again you stack the deck in your favor. So in this case, 30k was also quite a significant level for quite some time in 2021, 22. And then as you can see, in 23, 24, price also reacted with it quite a few times, but usually if we get a lot of reactions, this also makes for the level to be a lot more choppy and loses value. And I just want to give you an example with Link here, because I think there was a great example. So for example, here we had a consolidation, and then just to reaffirm what makes this a good level right here. So we have a push, we consolidated, we had one touch, few weeks of price action here. We got 1, 2, 3, 4, 5 touches. You can count as you like, just based on what I see right here. And then we got another wick here, another few touches. So for me, this is a very clear level, around $13, again, round number, and very clean range here on Link, which it does look, I say very clean, but you can see again on the top side, we have not so clean price action with the wicks and everything. But it's as clear as it gets, honestly, on crypto and pretty much on most asset classes. It won't be perfect ever. And then you can see that price respected it for quite a bit, even after we broke up. And when we broke back down, this is the level that price kind of gravitated towards. But then at some point, it kept testing and testing and testing, and it kind of lost its value here, because just look at the mess that this was creating, this level. And then it broke down, tested it again, and used it as resistance in this case. But as you can see, sometimes price will get very, very choppy. Same thing with Bitcoin with the previous range. Right here. Yeah, we're right here. Oops. So this range here, when it was starting, everybody was looking at it and they were like, me included, this range is around 60K to like 73, 74K. This is the range. And you see, again, perfect reactions. A wick here, broke down, retested it, confirmed it again as a support here. But then, as time progressed, because we had quite a bit of price action around it, you could see that it became very, very messy in this area. So the 60K area with so many touches and so much chop, it kind of got negated in this case. And this also happens, especially when we have prolonged periods of consolidation, and you need to be aware of this. So if a level gets tested up and down, breaks, reclaims many times over, I think it's pretty much starting to become worthless. And I would say that as a rule of thumb, once we break below it and then reclaim it and confirm it, then I think this level starts to lose its value, because it kind of made its purpose. And also quite often double fake outs are not happening as often as possible. So fake outs meaning that it will lose the level and then reclaim it. So you can see here that it did happen, but we spent quite a lot of time below it. And if you're holding here, if you, for example, longed here, let's say you longed here because you thought this was going to hold, and you have stopped somewhere around here below the lows, and then you are targeting the high, so potential trade, I think it will be the wrong move to just leave the trade on for quite a while you're underwater here, because then the reclaim here, there's another setup, and potentially you should have been invalidated in this trade. So yeah, just keep this in mind. As I said, it's not it's not exact silence, but it's very you need to use experience and common sense to start understanding this. Another example with Solana, I want to show you a very clean level here. This is extreme. It doesn't get cleaner than this. Around 130. Price action respected it perfectly. Very many touches. Good thing about this one is that it held for so long. Again, not too often it happens. But then when we go back to the higher range, now this gets a little bit more complicated. So I would say, just based on the eye test and on the price action, this is the level that it was most respected, so around 180. However, you can see here, for now, we'll see in the future, obviously, price is respecting this 200 level. So it's not exactly clean that this will be the level that will trade down to. It could, but it could potentially just reverse. So if you're in the situation where you're waiting for this to get retested and potentially play around this level, and you don't play around the 200 level, that's fine. You know, you might miss a trade, but also what you could do here is look for signs that this has strength and potentially maybe the downtrend is over. We will not retest this level. This is actually one of the first signs of strength that you would see for continuation. So let's go down, let's say, to the 12-hour chart. So maybe if we get back down here, so, and keep this level, I wouldn't buy this level just because, like, where is your stop loss here? It should be somewhere around here technically. But what you could do is, if you see some support here holding on the lower time frames, maybe you buy a breakout. You know, depends how you view the chart, but I think this will be a sign of strength if we see structure changing on the lower time frames. And that's another way to actually determine what makes a good level, because sometimes, you know, you should go, like, first of all on the higher time frames, but sometimes you don't get enough information on the higher time frames. And you might say, okay, this might be a good level here around 180, or let's jump into link because I want to show you something as well here. So this range technically is relatively clean, but as you can see on the weekly level, if we just draw somewhere around here, so around $9, there are a few touches on the wicks on the weekly, and you might say, okay, this is an important level. However, there's not that much information. So what we could do is go down to the daily chart and try to find confluence. So are there any closes around this level, or maybe the more significant level is somewhere around here, you know, in this case, somewhere around here. And there's been also quite a few touches here, you can see, and also obviously these last three reversal from this level. So it's not perfect that you will always have confluence on every time frame, but you could look for confluence on every, or at least one or more time frames for levels to be met and for price to react this way. In the case of Link, both levels made sense, the weekly and the daily in this case. What I would personally trade in this case is probably the lower one, because quite often, and this is again knowing your market, crypto tends to just reverse and push much higher and leave many people behind, which happened with Link. Technically, you could have taken breakout on both these cases and still be in profit and be good, but I would try to take the earlier breakout to keep my risk to reward better. And the OM is another example for this one, that sometimes, although you might have a very good range on the lower time frames, you know, even on the weekly here, just look at it. It looks good, but not that many touches. So on the daily, you have a great range, but when it gets to a certain level, it might already be too late because it reversed really quick. So you can either wait for the retrace, which it happened in this case, or you might attempt to take an earlier breakout here on the previous significant low. Okay, so what else we need to learn? As I said, not always you have such clean ranges and structures in crypto, and quite often you have just charts like SUI, which they never give you like a clean structure. Just look at this chart. This is the daily, but even on the weekly or whichever time frame you look at SUI, it doesn't look good. You know, it's difficult to determine like what are the cleaner levels to trade. Even like right now, for me, it's not very clear where the trades should happen on SUI, just because, you know, it's quite messy and volatile. And that's okay. You know, you don't need to, you're looking for the good charts, the one that speak to you, that you kind of can make sense of. And in this case, when this happens, when you don't have enough information, or maybe the token is new, or, you know, they're not significant levels, what would make for good support and resistance is clusters of price action. So where, in simple terms, where was price pausing, consolidating, and then reaccumulating, and then breaking out higher or lower? You know, it doesn't matter. In this case for SUI, let's just quickly look into it. There are a couple of clusters that I'll be looking into on the weekly, and these are these two. So around $2 again, a round number. So going through the checklist, and then this one is a little bit higher, around 350. And as you can see, it seems like this one wasn't respected. And on the daily, it does look very, very messy and very sketchy. So just by looking at it and thinking about it, I would probably exclude this one. So it's not so clean. Maybe SUI, it will reverse here, and that's fine, but that's a different type of pattern. Maybe you get a reversal pattern here and buy the strength on this level, on reclaiming of this level, but it's quite messy. You know, I wouldn't even consider this a support or resistance level because it does look quite messy. What I would consider, and in this case, I would need to be patient and be okay with missing this trade because we might not get there, is this level right here, because it's very clean. We consolidate a little bit around it. We have this level around 170, top is at around 230 or whatever, 240. So this cluster here, and it has good confluence on the weekly and on the daily. I would say this could act as, in this case, support. And something very important about these clusters before we look into a few more examples is that what I've seen happening is that quite often when we see price action like this and a cluster like this, it usually gets tested to the downside. So what I would do previously is like, okay, this area right here is was resistance and it turned into support. So maybe first time we test it, it will bounce off here. However, quite often, and of course depending on the conditions on the market, I will see price going much deeper into this block here. So it will probably go down to even the lower parts of the cluster here. So somewhere here, and then maybe potentially bounce and do its thing right here. And there are several examples. In this case, SUI, it did bounce from here just because it was kind of a liquidation event and it made sense. And you could argue that support was holding here. This area was important. However, when the liquidation happened, it gravitated towards the more significant level right here. But for example, Clearpool is one. So again, not much price action here. And you could say, okay, this is an important level. So around 40 cents, few wicks, quite a bit of touches. And as you can see, at some point we broke down. So it wasn't that significant, this level. And we gravitated towards the more important cluster right here. So again, we just tagged it and bounced off of it. But even on the weekly, you see that this candle right here, this red candle, signals the reaccumulation after this move upwards. And that's why, and before the next move up. And that's why, for me, in my eyes, this makes it for a significant level. And as you can see, price tagged it quite a few times, and it seems like it's holding it right now, and it's looking for a reversal at this level. So very clean example here. There's another one on Ondo. Yeah, so Ondo again, it had a push here to the upside. So not a lot of price action. And where the move originated from, right here. And you can see that we barely tagged it here. You might argue that there was some support for here. Like imagine we're looking just this and going even to the lower time frames, like let's say the 4 hour. This looks, even without this box here, this looks like a decent level, right? However, as you can see, price gravitated again to the higher time frame potential support area with a little bit more history and a little bit more price action, which was this place here where the move actually originated. Link, same thing, very, very messy. However, after this initial push, you might argue this was a cluster, but for me, it's just too messy. I couldn't see it. You might say that this here is a level that we gravitated towards, and you'll be correct. However, we're very, very close to a cluster of price action below, which, as you can see again, got tagged. And if this doesn't happen, because Link also has the bullish scenario here, if it doesn't happen and this kind of cluster doesn't get tagged, like right here. So we had a big push. We started consolidating right here. And as you can see, there's, let me just delete those. There's a cluster somewhere in here. So you might be anticipating for this to get tagged again. However, price gave us a signal that this might potentially not happen. Something that is happening right now to Solana. You see that we didn't have another retest. So price reversed from a little bit higher than the range low in this case. So in a bullish environment, and then this brings me again back to you need to know your markets and so on, so on. And in bullish environments, you might not see the levels tested. Although you mark it out, you have orders, the markets quite often will just leave without you. And you need to be prepared for this and potentially buy strength on the way up somewhere. You need to find an entry. But in a more bearish scenario, if you're hoping for price to, like in this case for Link, if you're hoping for price to hold this a little bit higher level that gets respected, quite often it will just drop below to the next more significant level that they're looking at. So these are quite a few examples. And by the way, if you have examples on your own that we want to look into, just post them in the comments and I will like chart them for you, provide some comments also down in the comment section. So I think these are quite significant, especially this last portion. These are quite significant tips and tricks that can help you really find and elevate the the level of your trading. And the last one that I want to share is with whenever you don't have a price history. So whatever chart we look at, let's just look at a random chart together. Let's say Eigenlayer. Maybe you want to trade this. And as you can see, first of all, there's not that much price history on this chart, but also now we're in the middle of nowhere. So below us, there's no support level whatsoever. So you'll be like, where do we trade this? Like if I want to trade this, first of all, maybe it's not a market that you want to be trading in, but for the sake of the argument here, where do you want to trade this? And usually what you could do is use significant highs and lows for areas of interest. So this is a high, this here is a clear high, this clear high, and obviously this one right here. So these on the way up could be resistance levels. Also, this one stands out because it's got quite a few touches. So somewhere around 250 could also be another level, although it's not at a significant high. Maybe price will gravitate towards this one first. But as for me, with like my experience, I don't think price will respect this level as much compared to the previous high. So what you could wait for this part here is several things. Maybe you wait for a pattern, first of all, and maybe this turns into a low here. And if this turns to a low and you want to take a trade here, you could trade it to the high here somewhere in this cluster of the previous move where it originated from. And on the way down, maybe you wait for this to hold in order to trade the continuation of the uptrend. So maybe something like this occurs and you're ready on both sides. So this level could be significant. This level, if it reverses from here, obviously could be significant, although we don't have that much price history. And on the opposite side, let's look at something like, I don't know, Bonk, for example. Okay, not a great example. Let's just look. Let's look at Bitcoin. I want to show you something here. Because this one is too clean. Sorry guys, but I just try to find a good example that I haven't looked at, so we can look into it together. This one, not as much. No, on the bullish side, I want to have a bullish one. Maybe we need to look into OM. Okay, so OM, we don't have much information here besides, this range broke. And now we're in like price discovery. And as you can see, this thing is very, very volatile. So my first thought is like, I don't have enough information to make a decision based on trading. However, there are a few things here that I could use as patterns that potentially could emerge. First one is here. So why is this level important to me? First of all, close to the range breakout. Second, this is the cluster here that originated the next move up. Third, on the liquidation day that we had a few days ago, this level was respected and we never closed below it. And then we could see that this kind of price action here is slowing down. Where's it? Yes. So this price of action is slowing down. So maybe if we get a move to the downside, it will be at this level, and then potentially it will reverse back into its direction that it wants to go. This is just the way I read the chart. Obviously, it could reverse from anywhere, but like this bigger cluster here is too much, too big for me to make decisions based on it. On the other hand, I can also jump into the lower time frame. This might never give us the pullback that we want. So on the lower time frame, if you see wicks like this one, so again, this could also be considered as a cluster right here. Right, we have this area of consolidation, and we're starting to show signs of strength. Maybe now we fake out here, we come down to the lower part, we tag it, we fake it, we have like a liquidity grab here, reclaim it. Maybe that will be a setup here when there's not that much information on what's going on the higher time frames. But these will be the two areas to look at, and it's kind of a safer and cheaper entry because like in here, like the price difference is too big, it's too volatile, and I cannot base my risk too good. But on the lower time frame, maybe there's a setup here, and if it fails, something like this, and if it fails, I could wait for price to get somewhere in here and then try to find a trade in here. It doesn't matter that every cluster, every piece of information you need to trade. You're just trying to find higher probability setups. And I'll leave you with that. Just go practice and keep the simple rules, and I think you'll become great at finding support and resistance levels.